Good morning, everyone. Today's the 8th of October. This is Brad Matheny. I'm trying to do a quick video here. I know that I've got a lot of followers that follow me for my gold analysis. And, well, to be quite honest with you, we'll come over here and take a look. I'm a little surprised that gold is pulling back as hard as it did. We had that crush pattern, and today we have a consolidation pattern, or sorry, a top resistance, then consolidation, then temporary bottom, then top resistance. So I do expect gold to roll around a little bit, but I expected to see it move higher out of this and push up to 27.20, 27.30, 27.40. And you can see I've drawn this flagging formation here, cross these highs, cross these lows, and I consider this move over here really just apex, what I call apex volatility. So typically you get a 5-wave structure in a flagging pattern. What starts the pattern, and then what we have is a pullback. And you can see here we kind of doubled through here. And I probably could have drawn a pattern here off of this low coming up into this area, kind of going okay, or maybe into this area, with an A, B, C, D, E, and then it failed and then came back down here and reconstructed off of this. But that leads to what I'm going to show you next, which is we have a very clean excess phase peak pattern coming up, rolling down, flagging out, and you could call it a flag here and then a breakdown, or you could call it a flag out here with a big broad flag and then a breakdown. And I'll change this so you can see it as a different color. So you can see this excess phase peak pattern setting up. We stayed away from this upper resistance level, and we have just now broken below this support level. If this excess phase peak plays out, then we would likely move downward to find a new low. Given the Fibonacci range, the two target areas would be the 5.0 level or the 618 level. Those would each be very clear new lows in this pullback. We've reached the 5.0 level. We are holding. The big concern, I guess, would be that the excess phase peak pattern at this point with this breakdown low means that we're going to see price move down to some low, wherever that is, and then build a consolidation pattern. And that's, I guess, what is concerning me in the fact that we have this excess phase peak pattern. Now, we also have the invert excess phase peak pattern coming here, coming up, flagging all the way out. Now, remember, the invert excess phase peak pattern is, got to make sure I highlight the right one here. Yep, that one is the invert of the bullish pattern. So whenever you have a bullish pattern, you're guaranteed probably going to have a bearish pattern. In fact, they happen almost in unison. One takes over from the other and vice versa. And this big breakdown here would indicate that we have this lower trending. So we need to kind of watch this 538 level. And what I would tell you is that, at this point, given where we're at with gold, I would say that, you really probably, if you're long, you need to set some sort of a protection level in this area or slightly in the, I would say maybe closer to this area, kind of in the middle of the 5.0 and 618 area, meaning that we have this level here is very important, and this level here is very important. If we hold at this level and we don't see it break down, great. I like that. That's a good sign. If we do get a breakdown here, we're going to hold at this flagging formation and try to recover and invalidate back to the upside. I still strongly believe, you come in here and you take a look at a daily, I still strongly believe that gold is making an attempt up to this 2680 error, 2780 area. I still strongly believe that gold is trying to make a move up into this area. And it really comes down to the fact that, you can almost measure these moves. I've done it for you before where we take a look at these measured moves, right? So I'm going to come over here. I'm going to draw a line. We're going to go basically from this level up to this level. We'll turn off the extension, make it a big bright, I don't know, bright yellow, I guess. Might be hard to see, so I'll make it a darker. Okay, now look, these expansions continue to mirror 100%. So here we have an expansion off of these lows up to these highs right here. Here we have an expansion off of these lows, and there you go. There's the 2780 area that I think is going to be our target. So you can see if I come across here, this is our target area. Set this to 2 points, Control CV, just like we get these 100% measured moves here, and Control V, just like we get these 100% measured moves right here. Now, given what I've just shown you, and given the fact that we have these 100% measured moves, and where we're at this point, if we had this move here, hypothetically, from these rejection points up to here, this would be right between a 5.0 to 618 expansion or contraction right in this area. You can see this. This is the outer measure. So I'm measuring hypothetically. If we had gotten up to this level, this would be the 5.0 to 618 level. Let me come back over here and come back over here and spread it apart. So what this tells me, guys, is that, we're looking at support. We're looking at very strong, moderate support in this area. And that's going to probably be where gold makes its final stand to try to base and rally higher. So I would call this a deep low opportunity in gold. Given what I've shown to you, we are likely going to base at this level. We're likely going to rally. We're likely going to go up from these levels, wherever we are, up to here, $146 move. My target is still this 2780 area. I see this as a very real pullback into support. And where we're at, look at how we got up here. We got up, basically just beyond the 382 level on a rally and then paused. And again, take a look at some of these moves. So, we take a look at this from this level down here up to this level. And look what happened. We got up above the 382 level and paused, came back down to the 5.0 and 618 level. Little bit of a breakdown here, but rejected, rolled back higher, and moved up. Now take a look over here. This was pretty much a straight move, but look at how this went. From here to here, we got up and we stalled. Little bit here, little bit here. Right around the 382, right around the 618. So again, it's pretty common to get these types of a stalling pattern around the 382 and 618 area. I would honestly suspect that gold is going to make a fairly quick recovery back to the upside right here off of this support area and rally back up to my 2765 to 2780 area. Okay. Perfect. I did all that in about 10 minutes. So we'll see how it plays out, guys. I mean, obviously not the move I wanted in gold today, this big downward move, but I think it's just flushing out support, and I think it's going to rally back higher. I would argue, folks, that, down here below 2620, you don't want to hold it. I mean, you don't want to get married to a position. If it breaks below 2620, I'd say all bets are off. And we need to see what happens because we are in this downward cycle trend temporarily, which is a short-term downward pullback. Trying to build a base, trying to build support, hopefully going to rally back out. And again, if I could make everything work perfectly the way I expect, I would, but that's not the way the markets work. All right, guys, more later.